In today's episode, we're going to dive into some real client stories.
The problem was all of the accounts had a lot of money going in and out of them, large deposits that couldn't be explained. Entry-level buyer in San Diego now is going to be somewhere between $700,000 and $900,000. Most of the homes that he was looking at are 1960s, 1970s built, but the inspection is telling us we've got some serious plumbing issues.
I often tell clients this: have a line in the sand of what you're willing to pay up to, and if it goes above it, you're out. Again, take your time. Put emotion aside, get more logical with the process. The last one we're going to talk about has to do less with the clients and more with the agent. Have you ever heard the phrase, who you work with matters? Well, that couldn't be any more true when it comes to buying a house. In today's episode, we're going to dive into some real client stories that highlight the crucial lessons that you need to know as a buyer and a seller in today's housing market. So with that said, Josh, what are we actually going to talk about when we're talking about these clients?
Well, we've got three different scenarios here. One where they had some curveballs on the loan and we worked through it and got it closed. One where super clean, squeaky clean, single borrower, great credit, and had some curveballs on the properties. First one fell out. Second one almost did, and it stuck. And then a third one that again just kind of goes through the mechanics of putting your deal together and how it can make an already stressful situation even more an unnecessarily stressful situation. So I was telling you, Jeb, I had an experience this weekend that as I was putting the outline together and pulling these stories together, it made me think I needed a new TV for my garage. Hang out in the garage, watch TV in the summer when it's nice and warm out there, and we needed a different TV. Well, if you're going to buy a TV, there's only 8 or 10 major manufacturers. Are you going for the greatest TV? Are you going for the budget TV? Do you want it to have a Roku built in? So you can literally go to any number of websites, read reviews, plug in your criteria, get a recommendation. And once you dial in on the right TV, now I go and shop by price among 10 different sellers. And I decide, do I want to go to the store and pick it up, or do I want to have it on my doorstep in 2 days, 1 day if I'm getting it from Amazon? People want to make home buying and getting a loan. And it's funny when I say that, people think in terms of I'm buying a home, but I'm getting a loan. You're purchasing that loan. We know there's closing costs. We know there's money in there, but we just look at it differently. I want to get a loan and I want to get the absolute lowest rock bottom interest rate. It's not a TV. It is not that simple. And the stories that we're going to go through kind of show you how trying to make it similar to some of your other purchasing decisions will make your life more difficult.
If you've listened to this for any period of time, you've probably heard me say the phrase, people buy emotionally and they justify logically. And I think that's really, really true when it comes to mortgage and real estate, because people start the process with an emotional need in mind, right? They want to buy a house. They want to start the process. They're thinking about their family. They're watching the TV shows or whatever it is. They're scrolling through, Zillow or Redfin or one of these sites, and they see a property that really sparks them and they say, I got to start this. And then they either search online, they do something with an emotional response versus the logical response, and it takes them down the wrong path in many cases. And what happens is at some point during that process, logic kicks in. And once the logic kicks in, it's, oh shit, what do I do now? This isn't what I thought it was. This isn't the terms, or these aren't the terms that I thought I was going to get. What do I do now? They call Josh, they call someone else, and it's, the process was different than what I thought it should be because it was a quick reaction. And so I think today, the moral of the story that I think we're going to get out of this is starting a little bit earlier in the process is going to serve you so much better than waiting till the last minute to make immediate decisions. So Josh, let's talk about first couple. Now, all of these people that we're going to talk about, I believe, are listeners of the show, came from the show and or somewhere a personal referral to some degree. So let's start with the first one here because, for the better part of 2 weeks, you were pulling your hair out here in the office. I was joking on you constantly because the stress meter was at a 50 on a scale of 1 to 10. And it's because there were things in there that should have been done differently to start that created chaos, but you got to the finish line. So let's talk about it.
Absolutely. It was a very difficult loan. Nothing that we wouldn't have taken on, nothing that we wouldn't have pre-approved the borrower. But if they had come to us first, we would have prepped them to say, hey, we've got X, Y, and Z that are issues here. Here's our workaround. Let's get prepped and let's make sure you're committed to doing that. What actually happened is their realtor was actually amazing. So we talk about the pros that you pick, and it was they lucked into this realtor because it was Katie's good friend, but realtor knew what she was doing, knew how to manage the transaction. We had a good realtor on the other side that was really going above and beyond to help some elderly sellers pull this together. So my life was made much better by having two really good realtors. But their good realtor, their good friend said, hey, talk to my lender. It never went the way that they wanted it to. So let's say B minus C grade loan officer. So not a failure, not a loser loan officer that's lying to them, that has no idea what they're doing, but looked at a very complex situation and concluded that it was simple and easy.
Complex.
We talk about, what was that?
Complex. Why? Why was it complex?
100%. So wife had multiple jobs in the same line of work, but doesn't work a full 40 hours. So that's variable income. So we didn't have a problem. We were going to be able to use her income, but it was not as simple as looking at the pay stub and going, hey, you make $1,000 a week. It truly was a complex calculation that needs to be backed up by supporting documentation in the form of a written verification of employment. Husband recently got his citizenship in the middle of 2022 and immediately registered an LLC and started a business. So we have 2 years of self-employment, but only a year and a half on the tax return. And like most businesses, for the first year, you don't have a ton of profit. We had plenty of income coming in, but there's a lot of expenses when you start a business. Then on top of that, they had all of the money needed to close. But they had said, well, we saved this, and because we have business expenses, we've got personal expenses, we're going to give 20 grand over here to our mom, and she can hold it and keep it in her account. Well, the problem was all of the accounts had a lot of money going in and out of them, large deposits that couldn't be explained. So primarily issues with documenting, confirming, calculating accurate income, then sourcing and seasoning all of our funds. And we got bailed out, Jeb, on the money front. Recently, FHA made a change where they follow Fannie Freddie guidelines that we don't need to document the donor's ability to gift beyond them sending in the wire to escrow, which is what Fannie and Freddie have always required. If we had needed to do that, when I got the mother's account, she had tons of money coming into the account. She didn't do anything wrong. It's just we were going to have to explain a jillion things. But we got bailed out on that side, that the mom was able to gift them back their funds that she was holding and just wire it into escrow and that source it. So that took care of that. They had not filed their tax returns for 22 and 23 because it was the first year of the business. They weren't exactly sure how to do it. They went to a major tax preparer, sort of a big box tax preparer, and there were errors. So we couldn't get a transcript on the 2022 tax return, and the 2022 tax return was missing the income from the biggest W-2. So just lots of questions through here. And that's what it's easy to say that as salespeople, and realistically, I consider myself a mortgage advisor, but I'm a mortgage salesperson. Salespeople are less detailed than the underwriters and processors that come behind them. No one with the lender that they had talked to could step back and see through the details. Big picture, it was there. But once it gets to underwriters' hands, they started asking a bunch of questions. So when I came into contact with the borrowers or listeners to the show, they had reached out and said, hey, we're buying a home. We're not getting answers to any of our questions. We don't know how this works. We don't know how much money we're supposed to have. They had us sign an LE. They said, those are just rough numbers. We'll tighten that up as we go, which there's some truth to that. But the loan estimate is really close to what you're going to be looking at in terms of the closing disclosure at the end. So they had actually had the loan approval from the other lender. The other lender had the loan approval and had sent them the conditions that they needed to provide. And they looked at it, we don't know what this is. They are asking us for 12 things here. And we look at it, and they had literally, that other lender had their loan assistant just copy and paste the approval and send it out to the borrower. And Jeb, you've been in the mortgage business. That makes sense to you. But if I show you the condition the way an underwriter asks for it from a loan officer versus the way the loan officer should ask for it from the borrower, is going to be confusing to the borrower. You're going to go, I don't know what these things are. We've got acronyms, we've got, phrases, terms I'm unaware of. But most importantly, in that approval, there were 3 make or break conditions that as it was structured at that point in time that they were not going to be able to meet. And that loan officer did not know that those were problems. They just, here, get me these 3 items.
And I want to take just a segue here, kind of not off topic, but just something we talk about all the time. When you go through the pre-approval process prior to ever making an offer on a home, the lender's looking at income, looking at credit, looking at the basis of this stuff. And they say, yeah, this all makes sense. You qualify. And from that point, you're not golden 100% to go that your loan's going to close, right? Because there are other things, other factors that pop up in the process. They need a purchase agreement. They need a title report. They need an appraisal. But there's also additional conditions that come once that file gets to an underwriter. And you can be pre-approved and ready to go, and deal could fall apart potentially based on what that underwriter asks. And so, we often talk about pre-approval versus pre-qualification. Pre-qual is just having a conversation on the phone, never talking about any of this stuff and saying, hey, Josh, I make this amount of money. Well, if you just heard his story and say, hey, I make this amount of money and all of this, you would think, oh yeah, dude, you're good to go. But then when you get the file, it's super complicated. So kind of referenced back earlier, starting early in the process, pre-approval is the key, guys. And that is still not 100% certainty. High likelihood if you're working with a pro, but still not 100%, right? So Josh, just, tangent there, but people
it's not a tangent.
I've got a loan approval. Why are they asking these questions? Well, they're asking these questions because there's still parts of the story that they can't piece together.
Yeah. So 2 things that I want to say there based off of that pre-approval, pre-qual direction that you went is to say, know yourself. If these borrowers had said, hey, we have 850 credit score, we've got $50,000 sitting in the bank, and we both have been on W-2 jobs for the last 10 years, that borrower probably doesn't need to start as far ahead. The lower the credit score goes, the less money you have, the more money has moved around or come into you at the 11th hour, whether it's going to be a gift, whether you're saving, whether you're self-employed and you're finishing a big job. Had a client 3 months ago that they had an $80,000 invoice out and it was coming in through closing. Those are moving parts. Those are curveballs. You didn't do anything wrong. Doesn't make you a bad borrower, but you do need to be aware, hey, my situation is a little more complex. I should start ahead of time. I should divulge everything that's going on. Even if it's not going to be a problem, just say, hey, is this going to be a problem? Is it an issue? Do we need to do anything differently? Because that is oftentimes we get the borrowers who have a complex situation who think that it's very easy and they can just come in hot at the 11th hour. So for these guys, if we had got to them 60 days before they started looking at homes, we could have got all of our ducks in a row and everything would have been smooth and easy. As it was, we were doing it on the fly and ended up closing a little bit late, which was stressful for the sellers, and had to get an exception from the lender to do it because we can't get one of those conditions or one of those items that you're talking about is the IRS for a self-employed borrower has to give a transcript of that tax return. And we don't have it yet because they filed that tax return relatively late. So again, borrowers did nothing wrong, as evidenced by the fact that they are in their home and they're homeowners right now. But it was unnecessarily stressful for all of us because we didn't get to do that legwork ahead of time. So when we say it is important that you get competitive terms, but you need to get them from an expert loan officer and know yourself. Again, if you have that super simple situation, you can go to almost any loan officer in the world. If you have that super complex situation, many loan officers may be able to get it closed, but your experience in getting it closed is going to be different.
Well, if you're new to the channel and you haven't done so already, do us a favor. If you find any value in the content at all, like it. And if you want to stay updated on everything, with regard to the home buying process, mortgage rates, everything there, subscribe to the channel. So Josh, story 1, right? Complicated. There were a lot of moving parts there. Is that normal? Do most files have complexity to them? Or is it rare to have issues like that?
I'll use nerd terms and see if those of you listening at home can follow along. It's generally a normal distribution. That's your bell curve. So most files are somewhere in the middle. Maybe 1 or 2 little issues, but primarily smooth. And then you have people on the left side of the bell curve that are gold-plated, easy as all get out. And then you have the hairy files out at the right of the bell curve. For whatever reason, post 2020, 2021, when a lot of that demand got pulled forward, a lot of those golden borrowers jumped in at that time. We really only seem to have two types of borrowers right now. The ones with a little bit of hair on them, which we're getting them closed. So they're eligible. They qualify. It just takes a little work, a little finesse. And then we have the other ones on the other end where they're just super streamlined, super easy, that we're clear to close in 10, 12, 14 days and go, wow, I wish they were all like this.
Okay, so we've heard the story about a complicated file where self-employed, moving money around. Let's talk about somebody that's fairly simple, or should have been fairly simple when it comes to the process. Some issues with the real estate side. What's this gentleman's story?
So, buyer down in San Diego, just under $1 million, which some of you are going to hear that and go, oh, he's buying a mansion. Entry-level buyer in San Diego now is going to be somewhere between $700,000 and $900,000. So looking at nice single-family homes. Most of the homes that he was looking at are 1960s, 1970s built. And you go, I remember the 60s and the mamas and the papas. I remember the 70s. We got disco. And you're like, it wasn't that long ago. We're talking 50, 60-year-old homes.
You stop. You stopped that 50. You stopped that 50, 60-year-old stuff.
Oh, I thought you said I stopped. I shut up. No, you're talking 50 to 60 years old. I mean, that's crazy to think in terms of that, because again, I am 50. I'm old. I'm 51. I'm old. So growing up in the 80s, if someone had a home that was built in the 70s, you're like, that's a new home. Well, now here we are in 2024. It's a 50-year-old home, and there are going to be some issues with this. So this borrower, gold-plated, all of his money sitting in one account, seasoned perfectly, self-employed, but perfect, easy tax return, been self-employed for quite a long time, 800 credit score, nice down payment. So the loan piece of it was really easy. We get the loan approval, we get the appraisal, call him up and say, hey, everything's good. How are we looking? Do we want to close early? He goes, well, we're having some issues. So, okay, what are the issues? Well, we got the home inspection back. This property is a flip. So we knew from looking at it, it wasn't the best flip. For me, looking at the pictures, it's a cute house. It's been recently renovated. A lot of the things, the Pinterest, Instagram, HGTV look that everyone likes. But he's like, you could tell they cut some corners, but the inspection is telling us we've got some serious plumbing issues. Not like, hey, my faucet doesn't work. The drain lines, and there were 3 main drain lines in this house. So he got 3 different quotes. He didn't just go and get one absurd quote and go back to the seller. Highest was $40,000, lowest was $30,000 to replace all of these galvanized drain lines from the late 60s, early 70s that were causing none of the drains in the house to drain properly. So that one literally fell apart when we're ready to go to loan docs after 10 days because the seller said, I'll give you $5,000. And he's like, are you out of your mind? Like, it literally doesn't drain right now. And that's we're going to contrast that to the property he did end up closing on last week. But from your perspective, Jeb, how common is that? What are you seeing in this current market where we have a lot of, 60s and 70s homes that are now hitting points where there's going to be some significant repairs either needed or coming soon. And sellers who've lived in that home for 10, 15, 20 years and don't think it's a problem are like, you're nuts. I'm not paying anything.
Yeah, I mean, you said it, right? I mean, the problem is when sellers live in the homes that they're selling and these things haven't been an issue with them, the immediate response, again, is an emotional one. It's, hey, I've never had a problem with it. It must not be a problem. But what sellers don't often understand, and where they're not getting the right advice in many cases is, hey, listen, that inspection report that buyer got is now something that agent, that listing agent, that seller has to provide to any buyer coming in at that point. So the sewer issue, all of those issues that are issues have to be disclosed. It's not, something where, hey, blind-eyed, I don't have to mention anything about the plumbing issue. No, now it's, it's an issue. It's something to be mentioned. And if you don't mention it, it can come up later, even after the transaction closes, because it's something you didn't disclose properly. So I think where people get it wrong is there's often a middle ground where people are willing to work, even from the buy side, buyers that are stuck on a number. Hey, just had a client recently that, they wanted to put in an offer at the property's listed at 531. We made an offer at 500,000, $30,000 low. And the guy came back at 521 and she said, I'm not going any higher than 500,000. Gave it 24 hours and now she's ready to come up to 515. So she went up considerably from where she started. We got the property for less, but the story is people change their minds. Again, emotion versus logic, right? Some people start thinking, this is the property I want. These issues, can be fixed maybe for less if I do a little bit of work, or maybe I put some money in, seller puts some money in. Nevertheless, I'm not going to go down a rabbit's hole here, but people don't often think further than what they're going through at the moment about that process. So as a buyer out there, don't be afraid to ask for things that are important to you. If you don't, there are going to be regrets later on. Don't be afraid to walk away. Have a line in the sand. I often tell clients this, have a line in the sand of what you're willing to pay up to. And if it goes above it, you're out. And you've got to be able to move on. And I know it's harder than I'm making it sound, but the reality is better opportunities come. Sellers change their mind. They'll come back. There's always a change of circumstance, or there can be a change of circumstance to put you in a better position. So, be willing to negotiate to some degree, but don't be afraid to ask for what you actually want and see how the seller responds. I've gotten $60,000, $70,000 credits or off the price of a property after going through an inspection report. You often hear me say, don't waive all the contingencies, guys. The property I'm talking about where we got a $70,000 credit off the purchase price was a flipped property. It looked beautiful, but guess what? It had mold. It had some other issues that weren't being taken care of that you would have never found had they not done the extra steps. So don't skip it. Long way of getting around to what you were asking, but important stuff.
Let's look, Jeb, how it played out in this situation. So seller, he said, my bids are $30,000 to $40,000, and he asked for $30,000. He was willing to negotiate. He's an attorney, so he understands negotiations. They came back and offered $5,000. That was the line in the sand. I'm not taking $5,000 for something that truly needs to be done today for those drains to function properly and is going to cost me $30,000. So he walked after paying for an appraisal, after paying for an inspection. So probably $1,100, $1,200 into that transaction, he walked. We get into
Which
the
is
next
a lot
property.
less expensive than having $40,000 out of your pocket to pay for drains that could back up if you don't fix them and create other issues.
So he finds another property. This one is a homeowner property, but you can tell it was upgraded. It was nice. Also, from a picture, if you had told me it was a flip, I would say, yeah, it looked very nice. Pool home, cool area. He likes the home. So he gets into it, and we have two issues. Home inspection. Drains are not draining as well as they should. Not as bad as the last one, but not draining as well as they should. He gets a plumber out there, basically gets told the same thing, $30,000. The difference being is it's not today an absolute problem. It's going to be a problem in the next 5 to 10 years is what the plumber is telling him. On top of that, Jeb, maybe comment on this, unpermitted addition. He didn't know when he wrote the offer that the addition was unpermitted. And so I went through it. I said, we don't have the appraisal back yet. The appraiser is going to tell us a couple things. Is he including it in the square footage of the property? Is it included in our value? The listing did not. The listing did not include the square footage of the addition. He's going to say, is it done in a workmanlike manner? And does it impact the desirability or marketability of this property? And it comes back and we have a block comment on there that says, common for the area, done in a workmanlike manner, no impact on the marketability of the property. So from that perspective, I show him that and he goes, okay, cool. I feel better about that. He had, someone had warned him that, hey, the seller should have disclosed this to you, that it was unpermitted. You'll have to disclose it going forward. He's a lawyer. He looked up something online and he saw that Fannie Mae or Freddie Mac can hold you accountable if there's and I said, not in any way, shape, or form. You're not the appraiser. That's why we get an appraisal in the file. It's all going to be documented. So to his legal mind, he read everything and was comfortable with it. Went back to the seller. I don't think he asked for $30,000 because, again, the situation wasn't that bad. And I believe, if I remember correctly, we settled on like a $9,000 credit. So we had a Navy pilot, alpha male. We had an attorney, alpha male. And the agents were like, we're trying, but these guys really are kind of dug in. But they did. They came to a middle ground that worked for both of them. And we closed on that. So a unique situation. It wasn't stressful for me, but it was stressful for him, not knowing all the way up till about 7 days prior to close whether this transaction was even going to come together.
No, and unfortunately, it's not uncommon, right? I mean, I often tell clients, hey, don't cancel your lease. Don't tell your landlord you're moving out until you know for certain that you're moving forward with this property. A lot of people get excited. They go under contract. They're like, I'm out. Landlord, 30 days, out. Like, slow your roll, dude. we got some work to do. We got the inspections. We got some things we need to work through before you go tell anyone. Because the last thing you want to do is be homeless in the situation. So again, take your time, put emotion aside, get more logical with the process. The last one we're going to talk about has to do less with the clients and more with the agent, in my understanding, and how the deal was structured initially. And I think this is important because a lot of times as agents, we give our clients advice on how they should make offers. Some people are as bold as telling their client what they should offer on the price versus kind of highlighting where prices are and giving them the ability to make their own decision. But, you'll often hear me say, traditionally, most escrows are 30 days. There's no standard in the industry, but traditionally speaking, 30 days. If we want to be more competitive, we should consider going to 25 days or 21 days. But one thing I'll say with that is we need to verify with the lender before we do this to make sure they can actually meet these deadlines. We can't overpromise and underdeliver because otherwise we end up putting ourselves in a position where we're out of contract, maybe our deposit's at risk, we create additional issues. So Josh, let's talk about what actually happened here and how it could have been different and in a less stressful way.
100%. And that less stressful is the most important piece. It's the most important piece of the last two things you said, such as don't give notice until we know we are getting close to closing, because that can add additional stress. If you're in a situation, you say, hey, I got to be out of my place August 1st and the deal's not closing on July 25th. That's going to be stressful. If you don't know where you're going to live, or if you got movers showing up, don't schedule movers ahead of time. Don't give your notice ahead of time. Make sure that it's all coming together before you get that dialed in. Well, this is similar. This is going to be a stressful transaction no matter what you do. If everything goes perfectly, you're still going to be stressed because you don't do this regularly, and you're not going to know that it's all going to work out perfectly or what comes next or how it plays out. So it will be stressful. Do everything you can to minimize the stress. So if you are writing an offer on a home and your agent reaches out and they say, hey, we've got 23 offers, and the most important thing to the seller is that they have money in their bank account in 10 days, then that's a pretty solid indicator that that's our hot button that we need to target. In this situation, that was not the case. I believe there was one other offer on the property. Sellers, I came to find out later, because again, as the loan officer, Jeb, if I talk to the listing agent, it's to answer questions about the financing. I'm not going to step on any realtor's toes and start asking, what's your client's motivation? When do they need to be out of there? What's important? I may ask them, is there anything important to your sellers? But I'm not going to probe and dig. After talking to the listing agent, there was no need. There was zero need. It was not one of their hot buttons to be out of here. But the selling agent had told the clients, I'm just seeing 14-day escrows. That's what's most common. I don't understand why your lender can't close in 14 days. And you're like, okay, that's just not true. It's flat out not true. There are some really crappy, in terms of high rate, high cost direct lenders out there that don't have a lot of volume. And what they're doing is they're saying, here's a guaranteed pre-approval letter, guaranteed 10-day close. That'll help you get an offer. Go out and get that accepted. They can do that because they don't have a lot of volume, and they are doing a lot of the heavy lifting on the front end in terms of pre-underwriting the file. But in this situation, there was no need, no benefit for that. It is not true to tell the client that typical is 14 days when 8 days by law, with getting your loan estimate out, closing disclosure out, waiting periods, everything, 8 days is as fast as you can close it. So this was written, I pushed back, and we got 17 days. Again, seller has no need to be out of there in 17 days. We closed in 18 days. So we were a day late. So starting on day 14, everyone, what's going wrong? What's going on? Why are we not closing on time? Why do we not have loan docs? Say, well, here's the situation. We have 2 non-occupying co-borrowers. We got 4 borrowers on the file. When we open the file, I get a new pay stub from the borrower that shows that he just changed a job a week before, which won't bore you guys with the details of that. Just typically, when you've been on a job, I have your pay stub, and then we look at your bank statements, and that employer is making a direct deposit into your bank. So we know that we didn't just type up a pay stub. We didn't have any of that normal stuff. So there were a couple of additional steps in there. We had some appraisal conditions that had to get cleared, and just all of these little things. So if we had said 21 days or sooner, which I felt very confident in being able to do, we would have closed on day 18, and everyone would have been like, oh, that was awesome. We closed 3 days early. You did a great job. We're so happy we got this done. But instead, We closed a day late. The buyers were happy. Buyers were fine. But both agents look around going, why aren't we performing according to the terms of the contract? Say, well, because you guys agreed to a contract that I didn't tell you was guaranteed to happen. I said my comfort level was 21 days or less, which we hit. So it just goes back to talking about what is necessary to make the deal come together. Your lender will do anything and everything possible to get that property under contract and to meet the terms of the contract. But let's have a meeting of the minds and everyone discuss how do we structure this transaction so that it works for everyone and doesn't create any unnecessary undue stress.
Yeah, I think it's important to know when you're writing an offer as a buyer that before you shorten contingencies, before you do some of this stuff, shorten the time frame, you might say, well, 21 days is not short. Well, again, traditionally speaking, if we kind of took an average of all the loans out there, I think 30 days is probably what would come up if I had to guess. And so anytime you're changing from kind of what's typical to something shorter, best to ask, what's the process here? Can we get a loan approval in 5 days, 7 days, an appraisal in 5, whatever the number is? Because my understanding is on that one too, there was also an appraisal deal that was not really your fault because the listing agent basically delayed the appraiser from getting in there. And then everybody's looking at you wondering where the appraisal is. Listen, you can only do what you can do, right? Your timeframes are based on other people's performance, unfortunately. But as you know, you're the middleman. That's why I don't do mortgages anymore, Josh, because regardless of what happens in a real estate transaction, you are the person that everybody goes to. You're the bad guy in every situation, whether or not you performed, done your job, exceptional. You're the scapegoat. So I don't like being the scapegoat. I like pointing the finger rather. And so that's why I transitioned to real estate. But that's
well, after 29 years of doing it, the best defense against that is communicate at all times,
absolutely.
Especially the closer you get to closing, and just let everyone know this is what it is. If you hide, you don't respond to emails, you don't answer your telephone, it just ratchets up everyone else's pressure and unhappiness. People can deal with the truth. They can't deal with people hiding and not giving it to them. And you're seeing here, everything doesn't always go perfect according to plan. You had asked, hey, do we have any examples here of a deal that didn't close or someone that came to us for a second opinion and wasn't able to close? I don't have any here recently. It's really rare that we have a file that dies through the process. They can require mid-course corrections. They can require little tweaks. But that, again, goes back to starting early, doing your homework, and getting a great plan and executing that plan. And going back to that pre-qual versus pre-approval, Jeb, really important that if I start digging and asking more questions, it's because I'm seeing issues there that an underwriter is going to dig and ask more questions. Mm-hmm. We don't want them to ask those questions. We want to tell them the story that we want told. So please don't ever get upset with me or whatever lender that you're working with, because as the information is coming in, had a listener to the show yesterday, we're working on a USDA transaction for them on the East Coast, and looking at it, was like, we need the tax returns. I didn't know. I mean, I knew you had a W-2 job, but now we've got a 1099 flying in here. I need to see how that actually translates over there. So it's not possible to give you a perfect comprehensive list of everything up front. So there are times when, after reviewing your file and your documentation, that we're going to need a couple of additional items. But that's not meant to have you do extra work. It's meant to prevent extra stress later on down the line.
Yeah, and I think that's a misconception, right? Asking additional questions doesn't mean something's wrong. Asking additional questions provides clarity. And quite frankly, Josh doesn't want any more paperwork. No lender wants any more paperwork or any more deep, conversation than needs to be done in these transactions, right? It's all about making sure the I's are dotted, T's are crossed, so that if and when something is questioned, you already have the answer for it, or you've already provided that condition so that it's clear, so that there's a roadmap, to get to the finish line versus, now we got to course correct. We've got to change this because we didn't ask the right questions from the start. And with that, I think it's important to know that you're working with a professional. Our team would love the opportunity to give you a second quote, to be the first call if you haven't started the process, because we're confident in what we do. We're professionals, been doing this combined almost 50 years, and would love the opportunity to let our expertise guide you through the finish line. So if we can be of assistance to you, use that referral link in the description, Josh. So last thing, we're talking a little bit here. What are the most common things that you're getting called on with regards to, what are we looking at here? When you get a call from somebody and they're trying to get a second quote, they're trying to do some, there's an issue. What are the issues that we're seeing?
A lot of times it's just they're not meshing. They got the pre-approval, they got what they wanted. So the loan officer's kind of out of the equation. So now they're with their realtor. They're out looking at houses. Hey, I got a great relationship with Jeb, with Joanna, whoever my person is I'm spending time with. But now we have to start working with the loan officer. They don't like the communication. They don't like the style of communication. They feel like they're not getting the information that they need. So a lot of that. We do get a lot of people reach out to the show and they just want a second opinion. And I probably should start tracking because I don't know the exact numbers. I'm going to say it is about 50-50, maybe 60-40, where we can save someone some money. So we've got 2 transactions, one here in California, another one on the East Coast that was more than a 0.25% or more in savings on $400,000, $500,000 loans. That's real money. So it was pretty easy for them to look, say, hey, I've been listening to you. Love the way you communicate. We've had good communication. 0.25%, I'm in. Boom. I tell people all the time, like if you're within an eighth, that's competitive rate in terms. So I had a conversation on Friday with a listener to the show and we're going through it and I go, we could do it. We could probably save you an eighth on this. I said, let me ask you a couple of questions here. I said, how is the communication with the loan officer that you're working with? Does he answer your calls? Can you text, email? Can you get a response? Do you guys feel like you're on the same wavelength? Yeah, we communicate with him. He's great. And I said, and you're under contract. So you've written some offers? Uh-huh. He's been getting you pre-approval letters, coordinating with your realtor. Yeah, all good. And he said, and you're not an expert on this, but you feel like they know what they're talking about. For me, looking at this is really the right loan for you. So there's not a structure problem. So I looked at it and said, if you want to start over from scratch and pitch this person overboard, we might be able to save you 0.125% in interest. That is $32 a month in monthly payment. If I were you, I'd probably stick where I'm at. And I don't have a problem saying that. I don't like people coming behind me when I've done a great job for someone and going, oh, if I cut my compensation, if I'm willing to do this one thin, I can take this deal. That's not at all what it's about. So I'd say it's a coin toss as to whether you're going to get a benefit from that second opinion either way. One of them is going to be, hey, you get peace of mind that you're in a good spot. The other is, hey, I actually found an opportunity to save some money. And they're equally likely because I still go and say most lenders are in a fairly narrow range of terms. And even the folks that we're talking about, it wasn't like someone called up and said, I'm getting, a 7.5 rate and we're closing them at 6.5. It's a quarter, 3/8 better, which when you're talking $400,000, $500,000, $700,000 loans, that's real money on a monthly basis.
No, absolutely. And with that, Josh, I want to ask the listeners, the viewers, a question. What do you think of this style of episode? Do you like hearing client stories? Let us know in the description or in the comments rather. And then also, do you have a story where you had an issue with the process? What happened? Good, bad, and different? Would love to know. Stories are very helpful for people out there going through the process, provides again, clarity, transparency in many cases, do's and don'ts, mistakes to avoid, all of those things. And it helps people. And the show is really about helping people. And that's why we appreciate you showing up every week to become the educated home buyer. And with that, Josh, if you haven't done so already, I'd like to ask one more time. If we could be of assistance to you, do us a favor, check that referral link below, like and subscribe to the channel. But until next week, adios.
Amigos.